Hello everyone. Today we will be diving into the world of stock market and breaking down some of the most important terms you will ever hear. Our goal is to explain these concepts in simple words so you can understand them easily. Let's get started. First term, share market. Think of the share market as a platform that lets the people invest in companies, or it lets the public invest in companies. Number two, shares of stocks. So, what are shares in stocks? A company's ownership is divided into small parts. These parts are called shares or stocks. Owning a share means you own a small piece of company. Number three, IPO, that is called as initial public offer. This is when a company sells its shares to public for the very first time on the share market. So there are different types of IPOs. Let's see. The two main types are, first, mainline IPO, usually which involves a company raising more than 10 crore. And second one is called as SME IPO, which usually involves a company raising less than 10 crore. Now, after an IPO, the company becomes a public company. Next term is called as FPO, that is follow-on public offer. If a company sells shares again to public after its IPO to raise more money, it's called an FPO, that is follow-on public offer. Let's see the next very important key term, and I'm trying to explain you in the most simplest of language, in most simplest words. So let's dive into what are shareholders and who are shareholders. So the people who own a company's shares are called as its shareholders. Next term is very important. You might have heard stock exchange. This is a platform where shares are bought and sold. In India, we have two main stock exchanges. First one is BSE, which is Bombay Stock Exchange, and another is called as NSE, which is the National Stock Exchange. Next term is called as market cap. What is exactly market cap? This tells you the total amount of money it would cost to buy the entire company today. That would be its market cap. Next comes stock market index, okay, or you say it's stock index. So stock index shows the average performance of companies with the highest market cap on a specific stock exchange. For example, we have two mostly used. First one is called as Sensex, that is the stock index for BSE. That's the Bombay Stock Exchange, showing the average performance of the 30 companies with the highest market cap on BSE. And second term is called as Nifty, the stock index for NSE, showing the average performance of the 50 companies with the highest market cap on NSE. Next, we will be dealing with all the terms related to accounts and charges. In very simple words, I'm going to explain you what are the different kind of terms used for accounts and different kind of charges in the stock exchange. So let's get started. Number one is called as Demat account. So this is a digital account where you bought your shares, which are saved in digital form. Next term is called as holdings. The shares saved in your Demat account are called holdings. Number three is trading account. This is a digital account you use to buy and sell the shares. Next term comes broker. Who's a broker? This is a company registered with the exchange that helps you open your trading and Demat accounts. Next term is called as brokerage, a charge you pay to your broker when you buy or sell shares. One very important term which is called as DP charges. So what are DP charges? A charge applied when you sell shares from your Demat account. That is called as DP charges. Next term which comes is called as statutory charges, which is these are mandatory government charges and taxes applied on every buy and sell transaction. So statutory charges. Now section 3 will be learning about the key terms and very important terms in investing versus trading and strategies. So first word which comes is investing. When you're buying shares to hold them for a long time with the goal of profit, that is called as investing. Number two is called as trading. You're buying and selling shares over a short period to make quick profit, that is called as trading. Next term is called as leverage or margin trading. Now, trading shares using borrowed money or margin money from the broker by paying a small amount yourself, that is called as leverage or margin trading. Now let's see the next term, which is called as intraday trading. So buying and selling of shares within the same day is called as intraday trading. Next term comes swing trading. So holding shares for the last one day up to a few weeks before selling, it's called as swing trading. It's a little different from intraday because intraday is within the same day and swing trading is at least one day up to a few weeks before selling. Then comes shares pledging. So taking money from the broker for the trading by using your own holdings as collateral is called as shares pledging. Now comes the next section, which is called as company size categories. One category is called as large cap stocks, which are the companies which are ranked between your from 1 to 100 based on the market cap. Second comes mid cap stocks, which are companies ranked from 101 to 250 based on their market cap. Number 3 comes small cap stocks, which are companies ranked after 250 based on market cap. Next comes section number 5, where we'll be dealing with all the terms which are associated with market sentiments. What are exactly market sentiments? Let's get started. First is called as a bull market. A time when most company share prices are increasing and people are optimistic about making a profit, that is called as a bull market. Second term is a bear market. A time when most company share prices are decreasing and people are fearful of losing in the stock market. Number 3 is called a stock market bubble. It happens when the market goes up for a very long time and most stocks are becoming very, very expensive. Next section is section number 6, that we'll be dealing with the terms. In very simple words that I'll be explaining the other investment options. First comes mutual fund. You might be hearing this term very often. What are mutual funds? Let's get started. So, mutual fund is a common fund where money from many people is pooled together. A fund manager invests this money in the stock market. There are other terms associated. Let's get quickly started with understanding those terms. First one is called as AUM, which is the asset under management. That is the total amount of money invested by people in a mutual fund. So there are a lot of mutual funds, and whatever is the total money, a total amount of money which is invested by people in a mutual fund, that is called as asset under management. Next term is called as mutual fund units. When you invest in a mutual fund, you get some units for that fund, which are similar to getting shares when you are investing in companies. But I am using the word here similar. It's not the same because mutual fund units are different, because here it's a common fund where the money from many people are pooled together. Next term is called as NAV. Whenever you are buying a mutual fund, you might have heard of NAV. So what exactly is NAV? So the price of one mutual fund unit is called as the NAV, which is called as the net asset value. So it changes once a day after the market closes. Next comes expense ratio. Very, very important. The fee that the mutual fund charges for managing your money. Now, quick tip here, it shouldn't be more than 1. And if you're having a very good mutual fund, it's very better that it shouldn't have an expense ratio more than 1. Next comes exit load. It's a penalty fee you might have to pay if you withdraw the investment from some mutual fund before a fixed time. Now, very, very important terms like what is ETF? It's an exchange traded fund. So it's a type of mutual fund whose units are traded on the stock market like shares. Now, let's get started to see what do you mean by REIT, which is called as real estate investment trust. Now, funds that invest in commercial real estate that generates rent, you can easily invest in their ETFs. Next term comes bonds. So an investment when you loan money to a company or organization and get interest in return, that is called as bonds. So now we will be learning about bonds in detail and we'll be discussing about them a bit. So like I've told that bonds, it's an investment where your loan money or my loan money, okay, we are loaning the money to a company or organization and we are getting the interest in return. We have certain associated terms related to it. Let's get started to deep down, get the clarity of these different types of bonds. First is called as the government bonds, which is bonds from any government institution, usually offering slightly more than the FD interests. Second one is corporate bonds, which is bonds from private companies, usually offering more interest than the government bonds. And then comes coupon rate. So the interest rate that you get on a bond is a term which is very important. That's called as a coupon rate. Now let's get to section number 7, where I'll be discussing about the types of funds by the investments. First one is called as equity. You might have heard of this word again and again. What is equity? So it refers to the ownership of companies. Equity mutual funds, on the other hand, are the mutual funds that invest in company shares. Index funds. So what are index funds? Mutual funds that invest only in companies that are part of specific stock index to match its returns. Then you might have heard of the word called as debt mutual funds. So mutual funds that mainly invest in bonds, those are called as debt mutual funds. Hybrid funds now. What are hybrid funds? Mutual funds that invest in both the stocks also and bonds also. They are called as hybrid funds. Next is international mutual funds. Definitely the mutual funds that invest in foreign stocks. Now, there's a very important term which is called as hedge funds. So there are different types of funds that use complex strategies to try and make a profit. They are typically requiring a minimum investment of 1 crore. Now, in my next video, I'll continue with the series. Have a good day ahead. Thank you.